Hello and welcome to another video where today I'll be taking you through an introduction to bookkeeping mock exam. Now for many of you, this is more than likely going to be your first AAT exam and therefore you may be feeling a touch nervous. Now remember, some nerves is not a bad thing at all, so please don't worry. As long as you're properly prepared, I'm sure you'll have no problems at all. Now if you're new and you're looking for more AAT content, I have a whole array of different videos including specific topics, top tips for passing exams and mock walkthroughs, so be sure to subscribe to the channel to keep up to date with all the latest releases. And if you go to the description below this video, you'll be able to find a link to a full list of my videos so that you can easily find what you're looking for. So within part 1 of this video, I'll be covering tasks 1 through to 6, and then part 2, I'll be covering parts 7 through to 11. If you do have any questions at all, drop them in the comments below, and if you find the video helpful, be sure to give it a thumbs up. Right then, let's jump over to the mock now and make a start. Right then, so the introduction to bookkeeping exam is a 1 hour 30-minute exam and consists of 11 tasks. So if you want a more detailed review of each task, I do go through that in a separate video, which is my 5 top tips for passing introduction to bookkeeping. Now I do appreciate for a lot of people this may be your first AAT exam, so we'll work through task by task, and what I'll do is we'll work through the answers. I'll explain each one as we go along, and if you do have any questions, please do drop them in the comments below. Right, let's make a start then. So task 1 is worth 10 marks and is about manual and digital bookkeeping systems. This task contains parts A through to E. Part A, identify which document would be used for each of the purposes below for 4 marks, so 1 mark for each. Identifying transactions that have been received into or paid out of the bank account in a given period. And then we've got some options, so it's either the bank statement, an invoice, petty cash voucher, or remittance advice. So in terms of the statement we would use to identify transactions that have gone into or out of our bank account, I think we probably know that that would be our bank statement. So it's not uncommon for a business to either produce a bank statement either daily or weekly or monthly to do a reconciliation. Now you won't have covered the bank reconciliation quite yet, that'll be something within your next unit. But the bank reconciliation is basically where you're tying up your accounting system, so your electronic accounting system or manual accounting system, with your bank statement, which is being produced by your bank account. Now these can come in a paper-based or electronic form. Obviously these days we are seeing it where they are more and more often electronic, but obviously they do allow you to print those out in, PDF format, etc. So the first one would be bank statement. Moving on then, so summarising transactions with a supplier and advising them of the amount being paid to them. Now this would be, from that list, a remittance advice. So remittance advice is often produced when a business pays by BACS, so that's Bankers Automated Clearing Systems, which is one of the most common ways in which businesses pay other businesses. So it is effectively an electronic transfer, but what's so great about BACS is it allows us to pay multiple suppliers in one go through one payment run. Now what most modern day systems will do, they will automatically produce a remittance advice, which is basically a document that details what it is, so what invoices you're paying to the supplier and how much the value of the sort of total amount that you'll be paying to them will be. And that can then be sent either by email or by post to that particular supplier, and it just lets them know this is the amount that you should receive within your bank account, usually within 3 working days. So that would be a remittance advice. Now the next one, detailing goods supplied to credit customers and the amount to be paid. So that would describe an invoice. So an invoice is sent out to your customers, usually credit customers, but it could be a cash customer. Sometimes people use an invoice as a form of receipt as well. Now, an invoice should detail on there the amount to be paid, the goods, the quantity, the price per unit, etc., the number of units, and then it should also show the net amount, so the amount without VAT, the VAT rate, and the total amount owed. It will usually also give them payment terms, most commonly within 30 days. And then the last one, authorising low value purchases paid for in cash, describes a petty cash voucher. Not something that all businesses would use, however, it is recommended just so that there's an audit trail or a way of keeping track of small cash payments that have been made, usually out of a petty cash tin. So that's part A done. So moving now to part B, it says accounts are to be opened for 2 new customers. Customer account codes follow the format below. The first 4 letters of the customer name and a 3-digit sequential number that represents the number of customer accounts. The last customer account code created is shown in the table below. Part B, enter the account codes for each of the 2 new customers for 2 marks. So again, 1 mark each. So let's follow the format that has been shown within the question. So it's the first 4 letters of the customer name. So for Chedstone Limited, that will be CHED. I will follow it with capitals. It shouldn't make a difference. However, because they've shown it with capitals, I will do the same just to follow the exact same format. It then states, followed by a 3-digit sequential number that represents the number of customer accounts. Now, because Clentock Limited was the previous customer and was 078, this next one for Chedstone Limited will be 079. And then again, following the same format for Court Lee PLC, it would be COUR, so the first 4 letters, followed by the next number, which would be 080. So hopefully nothing too complex there. Moving on to part C, it says each page in the general ledger is numbered starting from 0001. The page number is also the general ledger account code. Part C, identify the coding system used in the general ledger. Well, because they're only numbered and there's no letters going with these, it definitely wouldn't be alphabetical because there's no letters at all. It also wouldn't be alphanumerical, which is a mix of letters and numbers, so it would therefore be numerical. Moving down to part D then, it states identify whether each of the following systems regarding digital bookkeeping systems is true or false. Again, 2 marks, so 1 mark for each statement. So statement 1 then says it is possible to import data relating to bank transactions in order to complete the bank reconciliation process. That would be absolutely true. So this is something that's come in particularly with cloud-based accounting systems where you can actually not only import data into your accounting software, you actually can have a live feed so that it literally takes what's gone into your actual bank account and posts it directly into your cash book within your accounting software, ready to be able to do the bank reconciliation process. Even to the point now that they have such things as automatic bank reconciliations, which will literally do it for you and show you any anomalies. Okay, so that would definitely be true. The next one, it says it is not possible to post a transaction to the wrong general ledger account. Oof, that is definitely false. So within a digital bookkeeping system, we still have control of where our journal entries go. So we still need to select which accounts the transaction should be put to. Yes, you can automatically get some transactions to go to certain accounts. However, they could still go to the wrong account because there's still that element of human processing, and therefore it still opens it up to be able to put a transaction to the wrong general ledger account. So then the last one on task 1 says a purchase invoice from a credit supplier has been entered into the digital bookkeeping system twice. Part E, identify one consequence of this error. So we've got 4 options. It says the total cost of purchases will be understated. Well, it definitely won't be that one, because if we've entered in a purchase invoice twice into our digital bookkeeping system, that would make our purchases too high, wouldn't it? Because we'd have entered it in twice. So it's definitely not going to be understated, which would suggest that we'd not entered it in at all. The next one states the total amount owed by receivables will be overstated. Now, considering this is a purchase invoice, it would not relate to our receivables at all. Remember, our trade receivables relate to our sales. So any sales to our customers on credit would be recorded within our receivables ledger control account to show the amount owed from our customers. Now, this being a purchase invoice to a credit supplier, that would not affect our receivables balance. The third one then says the business may pay for goods that have not been received. Well, that one would absolutely be possible. So think about what we're doing here. We're entering in a purchase invoice to a credit supplier to say, this is how much we owe this particular supplier. Now, if we've accidentally entered that in twice, that doesn't mean we're going to receive 2 sets of goods. It would be our mistake for entering in the invoice twice. So therefore, it's very possible that we may accidentally pay both of those invoices, but only receive 1 set of goods. So that would absolutely be a consequence of entering in a purchase invoice twice. Let's just check that it's not the last one, just for completionist's sake. So the last one states the business may be paid for goods that have not been sold, which absolutely makes no sense for a purchase. Obviously, if this was the other way around and we'd sent out an invoice and a particular customer had entered it in twice at their end, then yes, they may possibly pay us as the supplier, as we would be, twice. However, as this is our purchase from a credit supplier, they obviously aren't going to be paying us, so that one would be incorrect. So that covers task 1. So what we now do, if we click answer, that will allow us to move on to task 2. Now task 2 is also worth 10 marks and is about principles of double entry bookkeeping. And this task contains parts A through to C. At the end of February, a business had the following assets and liabilities, and we've been given a list of various assets and liabilities. Part A then states complete the table below to show the accounting equation. Enter all figures as positive values. And this one's for 3 marks. So obviously 1 mark for each correct box. So the accounting equation, hopefully something that you are familiar with at this stage. But if you're not, definitely something to go back and have a look at. But as a quick reminder, the accounting equation is assets minus liabilities equals capital. So in a question like this, all we need to do is add up all our assets, minus off all our liabilities, and that will give you our capital figure. So all we need to do to start off with is identify what are assets and what are liabilities. So let's have a look at this list. So just remember that an asset is something that we own or that we are owed, and a liability is something that the business owes to either suppliers or loans, for example. It's something that is owed from the business. So relating that back to this list, so computer equipment would be something that we own. It's a physical asset. So that would be, as I say, an asset. Cash at the bank, again, money that we own and therefore an asset. Receivables, so these are the amounts that are owed from our customers. So again, because that is something that is owed to the business, it will therefore be an asset. Now on the flip side of that, we have our trade payables. Now payables are amounts that we owe to our suppliers. So because it's something that the business owes, it will therefore be a liability. We then have a loan from the bank. Now a loan from the bank, we owe back to the bank. It's obviously not free money, it's something that the business owes, and therefore is a liability. And then lastly, fixtures and fittings would be again a physical asset, something that we own, and therefore an asset. So now that we've identified which category each of these falls into, all we need to do is add up all the assets, then add up all our liabilities, and we can enter in those two figures into our boxes here. So if we add up our assets, they come to £36,934.98. Then our liabilities come to £6,851.35. So to get our capital amount, all we now need to do is do all of our assets less all our liabilities, which gives us a capital amount of £30,083.63. So being able to categorise items into assets, liabilities, income, expenditure is going to be absolutely invaluable as you work through your AAT. So it's literally something that will come up in level 2, 3 and 4. So the quicker you are able to do that, the easier you will find the rest of the qualification. So it is something very, very important to work on if it's an area that you are struggling with. Okay, moving down to part B then. It states the first transaction recorded in March related to cash taken from the till by the owner to purchase a new computer for the business. Part B, identify the effect this transaction will have on the accounting equation. So what we need to do here is think about the accounts that would be affected with this transaction. So a new computer. So computer is an asset. So if we're buying a new computer, we've increased the business's assets. However, we've paid for that asset by cash, which is also an asset. So obviously by paying through cash, you've decreased the amount of cash available. So you've decreased an asset. But as I said, you've also purchased an asset. So the effect would be to both increase and decrease our assets. Now, it's worth just as an alternative scenario here. If you'd bought this computer on credit, now that would change things slightly because that, you see, would then increase our assets, but it would also increase our liabilities because then we would owe that amount of money. However, because we've bought it outright with cash, instead of owing that money, it's gone straight to decreasing our assets. In this case, our cash balance. Okay, moving on to part C then. So it says the transactions below have been entered into the cash book with the effect of either increasing or decreasing the asset of cash at the bank. Part C, identify the opposite effect of each bank transaction by dragging the appropriate description into the table. And you can ignore VAT. So this one's 6 marks, so 1 mark for each box. So we need to think here, what is the opposite effect of each bank transaction? So we need to think, how has it affected the bank? And then what would be the opposing transaction? So the other half of the double entry. Okay, so let's have a look at number 1 then. So paid for advertising services. Now advertising services are an expense. Okay, now if it's paid from the bank account, that would therefore be a credit within our bank account. Okay, so therefore the opposite effect of that would be to increase our expenditure because we would debit our advertising expenses account. So we would have increased our expenditure. So we can drag in, increase expenditure. The second one on the list says transferred surplus money to a bank savings account. Now the effect of this is that we would obviously decrease our cash book balance, our bank balance. However, it's also been moved to a bank savings account. Now we're looking at the opposite effect. So we're focusing on the other half of the double entry. Therefore, we're focusing on the move into the bank savings account, which would have increased our asset. Okay, we're focusing, as I said, on the other half of the transaction. So in our cash book, it would have decreased our assets. Okay, however, we're not focusing on that part. We're focusing on where it's going to, which is our bank savings account, which is another asset. So it would, if we're focusing just on that bit, have increased our assets. Next one says repaid a loan. Now, in our cash book, that would have been another credit. Okay, it's money going out of the bank. Now, a loan, as we spoke about earlier, is a liability. Now, if we repay a loan, that's obviously going to decrease our liability because we no longer owe as much on that loan. Or if we've paid it off in full, we might not now owe anything. Okay, so the opposite effect of paying that from our bank account would be to decrease our value in our loan account. So therefore we would have decreased our liabilities because we now no longer owe that much on that particular loan. The fourth one says received a check from a credit customer. Now that would be a debit within our cash book, within our bank account. The opposing entry, okay, we need to think about what account that would be sat in. Now, if we owed money, or we were owed money, should I say, from a credit customer, that would be sat within our receivables, which is an asset. Now, once that customer has paid, i.e. they've sent a check, like in this example, they would no longer owe us that amount of money. So therefore, it would decrease our receivables, our trade receivables, to show that they no longer owed that money. So the effect, the opposing effect of that customer paying and it going into our bank account is that it decreases what we are owed from that customer, therefore decreases our asset. Ooh, try that again. There we go. Now the fifth one says received a check from cash sales. Now that would be a debit within our bank account because it's increasing our bank balance. Now because it's a cash sale, that means that it's an immediate sale and therefore it wouldn't have been recorded within our accounts yet. So to record that, we would have to credit our sales and debit our bank account. Remember, we can ignore VAT for the purposes of this, it states within the question. So we would therefore credit our sales account and debit our bank account. So the opposing effect would be to increase our income, with sales being income. And then the last one says received a refund from a cash supplier for an amount overpaid for computer repairs. So there's a few bits to this one that we need to digest. The main one being cash supplier. So it would have been recorded as debit computer repairs and credit our bank to show the money leaving the bank. Now, if we've received a refund, what we're doing or what we're saying is that we, as it states there, in fact, we've overpaid for these computer repairs. Therefore, the debit within our computer repairs to show the expenditure would be too high. So by refunding that cash or that difference, what we would do is we would debit our bank account to show the money coming back in for the amount that was overpaid. And we'd also have to decrease our expenditure because at the minute it would be showing that our computer repairs account, the value within there for the expense is showing as too high an amount because we didn't actually have computer repairs for that particular value. It was lower than what we had originally recorded. So the correction to that would be that it would decrease our expenditure. So you can drag that one in. So that finishes part C and that task. Now that is probably the most complex one that we've done so far, it being part C. It is something that you will get used to. I appreciate it will be confusing at first, but the better you get at learning your double entry, the ability to categorize the accounts, as I said earlier, that will really, really help when it comes to doing these sorts of questions because you will understand how accounts behave. Now, I do have a video called Learn Double Entry Bookkeeping within 5 minutes Obviously, you can't learn everything within 5 minutes, but it gives you a really, really good start as to learning how to categorize transactions into each category. So if it is something that you're struggling with, that is well worth a watch. But for now, that does complete task 2, and we can now move on to task 3. So task 3 then is worth 10 marks and is about processing customer invoices or credit notes and entering them into daybooks. This task contains parts A and B. Sales invoice number 3577 is being prepared from the quotation below, and we've been given a quotation. So we've been given a number of details on this, and part A then states, identify which type of discount the customer has been offered. So the first one on the list, it says bulk discount. Now, bulk discounts offered when a business is buying in large quantities, and as an incentive for buying in large quantities, it may be that the supplier offers them a discount. Now, the next one on the list says prompt payment, which happens to be what we're dealing with here. Now, prompt payment discount is offered as an incentive for a business to pay quicker. So as I mentioned earlier, it's not uncommon, it's in fact the most common for businesses now within the UK to have a 30-day payment period. However, obviously for some businesses, they want to get the money in quicker, whether that be cash flow issues or they find it easier from a credit control perspective. So instead what they do is they offer a prompt payment discount to incentivize the customer to pay quicker. Now on this quotation, it states 3% discount if payment is received within 10 days of the date of the invoice or net monthly, therefore being offered a prompt payment discount. So last one just to say is trade discount. Trade discounts are offered usually between the same trade. So you may have seen it where it might be, for instance, just off the top of my head, it could be a mechanic and that they get a particular discount for shopping at Halfords, for instance. Okay, moving on to part 2 then. So it says calculate the amounts to be included in the invoice. Okay, now they are shown in the references tab on the right hand side. You won't actually be able to see that because of I've got a slight crop on my screen so that I can make the text a little bit larger. However, we can scroll back up and have a look. So it says calculate the amounts to be included in the invoice, and we need to show the net amount, the VAT and the total. So it states 3,000 units of product 4380 at £1.80 each. Okay, we ignore the discount. Remember that is taken only if paid within 10 days. So that would not be on the invoice. It would only state the terms at the bottom of the invoice, but not the actual discount amount. So to calculate the net amount, all we would need to do is the 3,000 units multiplied by £1.80 per unit, and that would give us a net amount of 5,400. The VAT then is at 20%, so all we would do is 5,400 divided by 100 to get 1%, and then multiplied by 20 to get 20%. There are other methods that I'm sure you've come across, but just for argument's sake and the sort of mathematically correct way of doing it, we will divide by 100 times by 20, and that gives you a VAT amount of £1,080. And then last of all, the total. So all we need to do for the total is add the net amount to the VAT, and that gives you a total amount of 6,480. Again, hopefully nothing too complex there. That was for 3 marks, so 1 mark for each box. So part B then says enter the invoice in the digital bookkeeping system by selecting the correct menu option and making the necessary entries. So for the menu options, we've been given the following. So we've got discounts allowed, discounts received, purchases daybook, purchase returns daybook, sales daybook, and sales returns daybook. So this is a sale that we're making. So if we scroll back up, it states within the question, sales invoice number 3577 is being prepared from the quotation below. So this is an invoice that we are sending out. So we have sold these products. So if we scroll down, that would therefore relate to the sales daybook. So then the final part of this task, we just need to fill out our digital bookkeeping system below. So we've already been given certain fields. So we've got the date already, we've got the customer. So all we need to do is fill out the customer code, general ledger code, invoice number, net, and VAT code. So the customer code we can get from up above. So it states the customer code is GRA01. So we can enter that in. GRA01. The general ledger code. So we've got a few options here. So we know that it's relating to sales. So is it either office equipment or office stationery? So let's just double check by going back up. So this relates to A4 lever arch files. So it would therefore be office stationery. So we can select that as our option. The invoice number, let's scroll back up again. So it states the invoice number is 3577. So we can enter that in. So 3577. The net amount we calculated just above, which was 5,400. And then the VAT code, so we know is 20% because it stated that it was a taxable supply at 20%. So it would therefore be V04, 20%. And that finishes task 3. Again, hopefully nothing too complex there. And we can now move on to task 4. So then on to task 4, which is worth 10 marks and is about processing receipts from customers. This task contains parts A and B. Jacks & Co have received 2 cheques totalling £12,801.62 from JTP Products as detailed in the remittance advices below. The customer has not been offered a prompt payment discount. So we can see here on the left hand side that we've got 2 remittance advices. So we've got remittance advice 1010 and remittance advice 1067. And they contain 3 invoices on the first one and 2 invoices on the second. So scrolling down, it says company policy is to match each transaction with the remittance advice number or to query any underpayment or overpayment. Part A, allocate the amounts received by dragging the appropriate action to the customer report below. You may use each action more than once and it's for 6 marks, so 1 mark for each action. Okay, so we can see we've got a number of transactions here and basically all we need to do for this is match them off against these invoices and each remittance advice in turn. Okay, so let's start off with the balance brought forward, which we can see is 884.23. So all we would do is we'd scroll up and have a look for that amount on our 2 remittance advices. So we can see that that particular one falls on our second remittance advice. So 1067, we've got 884.23. So we can safely assume that we need to allocate this particular amount, this 884.23, against remittance advice number 1067. So drag that in like so. Now on the next one, we've got invoice number 3922 for the amount of £9,996.22. Okay, now if we scroll up, we can see that we've got here invoice 3922. Okay, so that's on remittance advice number 1010. So we can see that there is an invoice related to this invoice here. However, the amounts don't match up. Okay, you can see that there's a difference between the 2 amounts. So the amount that's been paid and the amount that we've got as owing on system. So initially it would be sort of easy to think, right, okay, well they don't match. So we may have an option here as we do for query underpayment or query overpayment. However, with these, it's really important to double check to see whether there's any credit notes. So we can see further down that we've got a correction here for invoice 3922. Now, if we take that amount off, so that 382.44, off our invoice up here, we will get the net amount. So obviously the invoice less the credit note amount. Now, if we do the invoice less the credit note amount, that comes to our £9,613.78. So actually, what we can do is we can allocate the full amount to remittance number 1010. So if we do allocate full amount, and what it also means is we can allocate the full amount for the credit note as well, because it's both of them together, so i.e. the invoice less the credit note, that comes back to the amount that's been paid on that particular remittance advice. Okay, moving now to this third transaction then, so invoice number 3987 for £355.22. Now we can see that we've got invoice 3987 within this particular remittance advice, so remittance 1010. However, the amounts again don't match up. However, this time we can see that there are no credit notes or any additional invoices that may relate to that amount. So there is a discrepancy between the amount that we have on system and the amount that is being paid. Now in this particular case, we can see that the amount being paid, so the 37522, is higher than what we've got as being owed on system. So in this example, we would want to query the overpayment. So we drag that over. Now the next one, we've got invoice 4009, and that is for £896.21. So let's first have a look. Do we have an invoice 4009? Yes, we do. So it's against remittance advice 1010. However, again, the amounts don't match up. Okay, so the amount we have on system as being owed is 896.21. However, the amount being paid is 892.61. So we've actually got less, or we've got an amount coming to us that is less than what we've got on system. So in this example, we would want to query the underpayment. Okay, now we've already sorted the credit note because that matched off against the invoice 3922. So we've just got one to go, and that's invoice 4126. So again, let's have a look. Do they match? So we've got invoice 4126, and that's for £1,035.78, which is the same as what we have on system. So we could simply allocate the full amount to number 1067. Okay, so that covers part A of the question. So scrolling down to part B. So it states Portway Products has received payments from 2 customers that have incorrectly calculated prompt payment discount, resulting in an underpayment. Part B, complete the table below by calculating the amount, firstly, that should have been paid, and then secondly, that remains outstanding. Enter all figures as positive values, and it's worth 4 marks, so again 1 mark for each correct box. So basically for each of these we need to calculate the prompt payment discount on the invoice amount and check whether it's the same as the amount that's been paid. Highly unlikely, considering it literally states within the question that they've incorrectly calculated prompt payment discount. So let's firstly work out the prompt payment discount from this first customer. So we would take the invoice amount of $9,876 and apply our 2.5% discount. So firstly, work out 2.5% of our $9,876. So the discount for this one comes out at £246.90. So to calculate the amount that should have been paid, all we need to do is take our invoice amount of $9,876 and minus off the discount, which would have been, as I said, £246.90. giving us an amount that should have been paid of £9,629.10. Now we can see that the actual amount that's been paid is £9,579.72. So effectively, they have underpaid. Okay, so this is the amount that they should have been paid, £9,629.10. The amount that has actually been paid was £9,579.72. So your difference between the two will be the amount outstanding. So if we do the difference between the two, that gives us an amount outstanding of £49.38. Now we will use the same technique for the next one. So this time the prompt payment discount is 2%. So we do 2% of our £2,190, i.e. the invoice amount. So 2% of that figure is £43.80. And then the same process as we did before, we would take off the £43.80 off of the invoice amount of £2,190, which gives us an amount that should have been paid of £2,146.20. So again, we can see that they have underpaid because the amount that's been paid was £2,080.50. So the difference between the two, again, will be your amount outstanding. So if we calculate the difference between the two figures, that will give us an amount outstanding of £65.70. Excellent. So that covers task number 4. We can now move on to task 5. Okay, so task 5 is worth 10 marks and is about processing supplier invoices or credit notes and entering them into daybooks. This task contains parts A through to C. The supplier invoice below has been received, and we can see that we've got an invoice, so Eddie's Services to Sharp's Property Management, for a total of £2,342.82. Part A then, identify the daybook in which the invoice will be entered. So this is for 1 mark, so obviously 1 mark for the correct answer. Now bear in mind, this whole task is about processing supplier invoices. So this is purchases. Okay, it's items or services that we have purchased as a business. So in terms of which daybook will the invoice be entered into, well, it would go into our purchasers daybook. Obviously, if we had sold this particular item, then it would go into our sales daybook. Okay, but considering this as purchases, we're dealing with a supplier who we've bought goods from, it would be the purchasers daybook. Okay, starting off not too bad. Let's move down to part B then. So part B then states complete the daybook by making 4 entries to record the invoice, totaling the total, VAT and net columns. Okay, so nice and straightforward. All we need to do is take the information from our invoice and enter it into these boxes here. So hopefully not too bad this. So the first box we had was the invoice number. So let's go grab our invoice number, which was 18384. So let's enter that in. So 18384. Next we had the total. So the total of this invoice was £2,342.82. So again, let's enter that in. So £2,342.82. The VAT, again, we can get from the invoice. So it was £390.47. Enter that in. And then the net amount, again, from the invoice, 1,952, so £1,952.35. And then all we need to do is total our net column, VAT column, and total column. So we'll start with our net column. So if we add up all those figures, that comes to £8,038.05. So we can enter that in. If we then add up our VAT column, that comes to £1,607.61. And then finally our total column, if we add up all the figures again, it would come to £9,645.66. Okay, so really straightforward. We're literally there just taking the figures straight from the invoice and entering them in. So very few calculations, and the calculations that we had were literally just adding up the figures. So hopefully nothing too complex there. So moving down then, it states the goods return note and credit note below relate to the incorrect goods supplied to Hawthorne & Co. on the 26th of May. So we can see here we've got the goods return note and we've got the credit note. It then states for part C, identify two discrepancies in the credit note. So basically all we need to do here is check our credit note with the goods return note and see what doesn't match. Okay, so I would start off with the obvious things. The product code. Well, we can see that both product codes do match, so it's definitely not that. We can see that VAT was at 20%, which is the case for both of them, so it's not that. Now, when we get to the quantity, we can see here that we've got 90 items, yet on the goods return note, we've got 9 boxes of 8 items, which definitely doesn't match up. So the first one here, the first discrepancy, would be the quantity of items. Okay, now we've already discounted the product type, we know that they're the same. The next one says the date of the credit note. So let's have a look at the date. So we've got 16th of May, and then we've got the 26th of May, which again, obviously don't match up. So your second discrepancy would be the date of the credit note. Now let's just double check that the item price is correct. Okay, we have found the two there. However, just for completionist sakes, let's just make sure that the item prices do match up. So on here it says £3.10 each. Okay, so to find out our product price for each item, what we would do is we would take our £24.80 per box, and apparently there is 8 within a box. So if we did £24.80 divided by 8, that would give you £3.10. So the amount per item, so the item price, is correct. Okay, so the two discrepancies in the credit note and the goods return note would be the quantity of items and the date of the credit note. Okay, so for those, again, quite nice. We just need to work through each one and make sure that we discount any that are correct and obviously note down the ones where there are discrepancies. Okay, so again, hopefully nothing too complex there, and that does finish off task 5. We can now move on to task 6. So task 6 is worth 10 marks and is about processing payments to suppliers. This task contains parts A and B. On the 17th of May, you are preparing payments to suppliers. It is company policy to always take advantage of any prompt payment discount offered. This is a report from the digital bookkeeping system today. So we can see that we've got supplier account codes on the left-hand side. We've got supplier names relating to those account codes. And then we've got the terms of payment next to each supplier. Okay, remember the supplier terms of payment will be different for each one. You may get some that are the same. Okay, however, they could be different from each one because it will be the supplier that sets those terms. So part A states identify the amount to be paid and the date by which the supplier should receive payment for each of the invoices below. And this is worth 6 marks, so 1 mark for each correct box. So you can see here we've got the supplier names, we've got the invoice amounts, and we've got the invoice dates. And we need to determine the amounts to be paid and the date by which the supplier should receive payment. So the thing that's really, really important here, okay, is we need to take note that we're on the 17th of May and we should always be taking advantage of any prompt payment discounts. So if they are available and we are within time, then we should be taking them. So let's think about this first one here for Kings Limited. So the invoice date is the 10th of May. We're on the 17th of May. Now the payment terms state that we can have a 5% discount for payments received within 10 days of the date of the invoice. Now if the invoice date is the 10th of May and we're on the 17th, we are in the period at which we could take that prompt payment discount. Now because it's company policy to take advantage of them where they exist, we would obviously try and take that 5% payment discount. So the amount to be paid would be the invoice amount of £5,401.20 minus the 5% discount. So to calculate that, we would first need to do 5% of our invoice amount of £5,401.20, which works out to be £270.06. We can then minus that off the invoice amount of £5,401.20 to give us the amount that should be paid of £5,131.14. Now in terms of when that would need to be paid by, remember it needs to be paid within 10 days for us to receive this discount. So within 10, very, very important. It has to be within. So not 10, within 10. Therefore, the date by which the supplier should receive payment would therefore be the 19th of May. Okay, if it states 10 days, okay, then it would be the 20th. But because it's within 10 days, it would need to be done by the 19th. Okay, now the next one down, Trend Tree, okay, has an invoice amount of £1,898.28. Now all their terms of payment states is net monthly, so there is no discount amount offered here. And remember, net monthly means you've got till the end of the following month from the invoice date. So in this example, the invoice date was the 13th of May. So we would have up until the end of the following month in order to pay. So the amount to be paid would be the full amount, so £1,898.28. Bear in mind there was no discount, so it would be the full amount that would need paying, and the date by which we would need to pay would be the end of the following month, which would be the 30th of June. Now the last one, we can see again, does have a discount, so they do have a prompt payment discount on offer. So the invoice amount is for £18,334.50. The invoice date was the 16th of May. Now if we pay within 7 days, we need to take off a 4% prompt payment discount. Now of course we are within 4 days because this invoice date was the 16th of May and we're only on the 17th of May. So to calculate this, we would use the same process as the previous one in terms of the King's Limited one. So we would do 4% of our invoice amount of £18,334.50. Now that gives us a discount amount of £733.38. So the amount to be paid would be our invoice amount less this discount amount, which gives us an amount to be paid of £17,601.12. And the date by which the supplier should receive payment, bear in mind, this needs to be done within 7 days. Okay, so therefore it would have to be paid by the 22nd of May. Okay, again, it's within 7 days. Very important. So moving down then. So on the 31st of May, the statement of account below was received from a supplier and compared with the supplier report from the digital bookkeeping system. So we can see here we've got a statement of account from Wolf PLC and the supplier report of Wolf PLC. So it states part B then, identify which 3 transactions shown in the supplier statement account have already been paid. Right, okay. So we can see we've got the supplier report and statement of account. Now, what's really important here is we can see that these are the amounts that were owed according to the statement of account. And then on the supplier report, we can see what has either been paid, so we've got this check here, or has now been credited. Okay, now the check numbers obviously don't, in this case, match up with any of the invoices. Obviously this number here doesn't match up with anything on here, as it wouldn't do, because the check number is obviously individual to whatever that business is in terms of where they are in terms of their checkbook. So what we need to do is basically try and break these figures down and see what matches up. Okay, now what I would recommend doing here is first adding the two together. We can see that this number here for this check doesn't directly match off to any of these figures within the statement of account. Therefore, what we can safely assume is that there are a number of transactions that relate to those amounts. Okay, so what I would do is add your check and your credit note together. Now, by adding those two together, that gives you a figure of £3,428. Now, all we need to basically do is find the figures now within the statement of account that match off against those figures. Now, I would always start with the earlier ones, because that way, obviously there's no point for a starting from the end. That would make no sense. But we can see that this check was received on the 29th of May. Now, or sent on the 29th of May. Now, obviously that does mean it could cover any of those invoices. However, it is more likely that they're obviously going to be paying off the earlier invoices first. So what I would do is start from the beginning and see what matches off against that particular check. See effectively if you can get two of the figures to add up to that 3,428, which was your credit note and your check added together. Okay, now if we add our opening balance and our invoice together, that comes to 3,428, as it were. So it is literally the first two transactions on that statement of account. So in terms of the three transactions that have already been paid, it would therefore be your opening balance, the invoice, and the credit note. Okay, so all we need to do is select each of those three. So it was the opening balance, the invoice 1572, and the credit note 129. So the final part, Part C, says calculate the amount that should be paid to settle the remaining balance of the account. So all we would do, now that we've matched each of these three off, is see what the amount remaining is still to be paid. So if we take our supplier report and basically add up all the invoices and the opening balance, and then take off the credit note and the check payment, that will give you the remaining amount to settle the account. Okay, so if we add up all these invoices, take off the credit note, take off the check payment, that will come to an amount of £19,270. So that would be the remaining amount to balance the account. And that finishes off task 6. And that concludes part 1 of this mock run through. Remember, if you have found this video useful, to hit that like button and subscribe to the channel for more content. I will see you all in part 2.